Whenever there's a market jitter, there's a conspiracy theory. And one of the conspiracy theories around at the moment that there is a crusade by short sellers and even US politicians to bring down Deutsche Bank. Now, the logic there is quite deeply flawed. Nobody needs a banking crisis. But there is a very serious question as to whether or not the world is headed to the next Lehman moment. Will we see a financial meltdown of a 2008 sort of scale as a result of the shenanigans going on within Deutsche Bank? Massive derivative exposures, of course, the big problem there, and also big questions around the liquidity of not only Deutsche Bank, but by implication the rest of the German and the European banking system. If we hit a wall on this one, what happens next? Warwick Lucas, Chief Investment Officer at Galileo Capital. What does all the noise mean, Warwick Lucas, for us here in South Africa?
Right, well, it is a bit like a crowded cinema. Quite often they're fine until some idiot goes and shouts fire loudly. And I think that's really the difficult situation that Deutsche finds itself. I mean, yes, it is in a bit of a tough space, has an enormous open derivatives position book, but it is running itself currently quite well. It's got sufficient liquidity for day-to-day purposes. But the person that basically shouted fire in the crowded cinema was US regulators wanting to hunt them down years and years after the last financial crisis for mis-selling mortgage securities in exactly the same way that every other bank appeared to mis-sell mortgage security in those days.
But when it looks at the derivative positions, though, and Warren Buffett so very famously, way before the financial crisis of 2008, said, "What is it? Derivatives are the weapons of financial mass destruction."
Correct.
Along those lines. I mean, just how serious is that big open book of derivatives in the life of Deutsche Bank, and therefore in the life of you and me?
All right. So let's talk about how big it is and how big it is in effect. Okay, the actual open positions in the order of 42 trillion euros, which is about $46 trillion. The actual net amount is around about $18 billion. Now, what that means is, on the one hand, they might be long of say a dollar contract, and then on the other side, they're short of it.
So they're fairly well balanced in terms of their contracts.
They're basically very well balanced, and most of those are really very liquid. Where you start getting a little bit of a gungy areas, or what are called their level 2 and level 3 derivatives. Now, what those are is they aren't exchange traded. Those are things like, for example, collateralized debt obligations, mortgage-backed securities, things that basically have to be valued in relation to something else that's traded. That's what you call a level 2, and there's about 706 billion euros of those, so that's quite a number. And then the really gungy ones, which are really hard to value because they compounded obfuscation upon complexity, about 18 billion euros. So these are big numbers.
But is it a problem?
Well, that's the question, because banking is all about trust. I mean, we saw it, for example, in our own South Africa with Sambo Bank. After lots of toing and froing, noise and screaming, was this thing going to go bust, bank runs, support, etc.? Well, it turned out that Sambo actually was all right. And I mean, shareholders got a payout of over R1 a share. But the problem was actually getting there from the sticky point through this difficult period to the other side. And that's really the key issue with Deutsche.
Okay, so Deutsche, we've seen a precipitous share price fall in Deutsche Bank, and that's scared the living daylights out of markets in the last 2 weeks or so. Things seem to have stabilized. Are we out of the woods yet?
Well, the latest stability comes from a French-derived report that suggests that the actual fine that Deutsche will pay from the charges relating to the American Department of Justice would be about 5 billion euros as opposed to the 14.
Which is fine. That's on the fine side of it, and that's petty cash. It really is. In the broader context of global banking, it doesn't change the fact that there are these magnificently huge exposures to derivative products.
It doesn't change those. However, what it did change is the actual net valuation of Deutsche Bank, because basically its equity position, its market capitalization was around about 16 billion. In other words, that fine would have wiped most of it out.
Yeah.
So, you know, that was your loud scream in the crowded cinema.
But the sort of perceived wisdom in the market is that regulators weren't going to allow that to happen, and hence the reduction in fine. What is ironic is that, you know, suddenly First Rand is bigger than Deutsche Bank.
Yep.
It feels like 2008 in terms of valuations all over again, when I think the big four banks in South Africa were amongst the top 10 in the world for a week or two.
I think it's certainly fertile ground for concern, yes. I think what we do have differently is an environment in which banks are much more aware of counterparty risk. You've had repeated stress tests in the last few years, so individual banks have been placed on a much more aware footing.
Okay.
I think what did raise concern was when the German government said no bailouts, which unfortunately was a really badly timed comment, because the best which they should have said was basically nothing.
Warwick Lucas, I'll put the question to you. Broader implications. Deutsche Bank survives, it goes into zombie bank status, it's bailed out, and it's supported Royal Bank of Scotland style 2008. Is it just not perpetuating this lack of faith that markets in the world have in the global financial system?
There certainly is a risk of that. I think the main thing, though, is that when banks need liquidity, it needs to be supplied, because otherwise you do precipitate a Lehman type moment. And the problem with the Lehman moment is that you had a moment where everyone said, right, this is a good time to make an example of them, so let's apply Darwinian economics. And the result was that you had an immediate shutdown of the payment system, because no one wants to pay anyone else when they're concerned that the payment you're expecting to come in doesn't appear because a bank's gone out of business. So it shuts the economy down, and that's why you don't want to get there. I mean, to actually bail them, say, well, okay, let's get in new equity or whatever, I mean, to me that's actually kind of irrelevant that those bank bailouts had that. The key thing is supply liquidity when it's needed. That's absolutely critical, and that's a job that central banks need to be focusing on.
The biggest, what are the most dangerous words in the English language? This time it's different.
Oh my word.
Is it different this time to 2008?
To some degree.
Elaborate.
To some degree. Just, I think that the process of preparation that we've seen, the stress tests, and albeit Deutsche has done amongst the worst among the stress tests, the point is at least the tires have been kicked, at least its counterparties' tires have been kicked. That reduces the risk of the exits being crowded at the wrong moment in the cinema. So let's see. I think we are in a better situation, but make no mistake, the IMF was 100% right when it said that Deutsche is the largest block of systemic risk out there. They're absolutely right. It still is.
Well, my thanks to you, Warwick Lucas, very much for coming in this evening. Yes, scary stuff indeed in the world of global finance. This time it's different. The scariest 4 words in the English language. This time, though, it does feel a little bit different. Deutsche Bank has got the backing of the German government in retrospect. I know Warwick did mention that the regulators had said there won't be a bailout, but after the experience of 2008 and the huge calamity that followed and the freezing up of the financial system after the Lehman collapse, when they were taught a lesson, the rest of the world went into something of a free fall, and this time it could be considerably more serious as faith is undermined in the banking sector. So big stuff to come in the days and weeks ahead as we watch this Deutsche Bank story. It may be far away, but certainly it's an issue that can impact us here all the way down south in South Africa. Warwick Lucas, Chief Investment Officer at Galileo Capital, thank you very much for coming in, and thank you also for watching this edition of The Moneymakers. More big issues to discuss and dissect next time on the show. Thank you so much for watching. Good night and goodbye.